Here we have the current stock market update for GameStop Corporation, stock ticker GME. Before we begin with today's chart analysis, if you find these educational materials to be helpful in your trading, please remember to click the like and subscribe buttons and leave your thoughts below in the comment section so that other traders will be able to find this information more easily on the platform. So here we have an hourly price chart. Each candlestick on this price chart represents a 1 hour trading period. And as we can see here, share prices are attempting to form a bit of a recovery after forming these longer term price lows, which we're seeing at $19.31. Of course, this was a fairly significant price movement to the downside. A lot of damage was done to this chart in the process. And as we can see, that price low from the August 28 trading session at 1988 was broken in the process. So as we assess this price trend movement in the video, we will be looking at some important price zones, which can hopefully be used to identify some profitable trading strategies for this stock in the days and weeks ahead. So as things currently stand, what we're starting to see here is a bit of a recovery movement higher. We have seen share prices fall to these 1931 lows, and then these near-term highs are coming into contact with some prior resistance zones as well as some moving average resistance. And the near-term high comes in right around $20.90. So that would be this price movement here that we're watching. We can sort of zoom in on this a bit. And we can see that these share prices did form these lows and then move toward these more recent highs coming in right around $20.90. So that on its own is a bit of an encouraging sign. There is some psychological significance to this $20 mark. This is possibly the most closely priced level, most closely watched price level for this stock over at least its recent history, given the Roaring Kitty situation and the placement of his options trading strategy trades. So the fact that we have managed to move above that level, there is some positive sentiment that can possibly be garnered from those moves higher. The real question going forward is whether or not this relief rally higher is the real thing. Will we be able to see some strongly positive momentum that's actually generated to the top side? So what we do to make that type of assessment is we first look at the relative strength index. That'd be the indicator reading on the bottom of this price chart here, and we can see a few different signals that are occurring at the same time. So specifically, what we would first point to would be this break in upside trend momentum that did occur during these price gap movements lower. This would have occurred during the September 10 trading session. So this was a very ominous development here for this stock because we were starting to see some positive trend momentum that has now clearly broken to the downside. This is the hourly price chart. So this is also the hourly relative strength index reading, which means that it's one of the most closely watched indicator developments in the market. I would say that the daily chart and the hourly chart are the most closely watched. So when we start to see movements like this, we can then assume that a large portion of the market is seeing the same information and is possibly basing trading stances and strategies on those developments and on those indicator signals. So this was a negative development here clearly, and then we did move into oversold territory. Since then, we have started to bounce here, and the share price itself is starting to form some higher lows in the process. So this is significant because what you actually have here is a bit of a bullish divergence condition. The share price is trading to new lows in 1931 in relation to those prior lows at 1988. But as you can see here, the indicator reading itself is moving higher, not lower. So what this does tell you is that the indicator reading is not confirming those recent price lows. One thing that should be mentioned, however, is that this sort of event can happen when share price movements gap to the downside like this. If you see tremendous amounts of volatility in a short period of time, volatility levels that are not, really in any way indicative of the broader trading trends. I mean, we don't really see any other gapping price movements on this part of the price chart. And then as we can see, this price gap is a substantial price gap. It's a very large price gap. So when you start to see those types of events, bullish indicator divergences tend to carry a bit less weight because it's not so surprising to see some distortion in the indicator reading itself. So we won't just dismiss the fact that this bullish divergence is here. It is here. It's right. I mean, we can see it in front of our face here. So we're not just going to pretend that it's not there. But it does. You do need to take it with a bit of a grain of salt because this was developing after a severe round of downside price volatility. So that can have a distortion effect in the indicator reading itself. Overall, the longer term reading does remain positive in relation to the shorter term reading, which is still negative. So we are seeing some downside price movement there as well. But we can see that the longer term perspective here, this longer trend line, is still in the positive direction. So there are a couple of positive signals here that can be pointed to. You did also break out of oversold territory with the relative strength index, the purple line moving above the yellow line, which is the exponential moving average of the relative strength index. So those are all bullish signals. We can't just ignore that. So the majority of the evidence in the indicator reading currently does point in the bullish direction. However, it's not completely bullish, and we do have to consider the fact that this recent price volatility to the downside could be distorting things enough to create a possible bullish divergence condition. So if we sort of look forward here and just sort of take assessments of what type of things could occur at this point, I would start to expect to see some resistance right around 2166, which was this prior price low. One reason that this might not occur, favoring the bulls here, would be the fact that we're coming back to this price gap here, which could see a significant amount of buy and sell orders that are still parked within this region, this price region. So if that is true, and we are seeing a lot of unfilled orders that have not been tripped yet, this could generate enough positive share price momentum to then easily break above that 2166 area. The real question about whether or not that occurs would be the number of outstanding orders that are still in place here. This is a very large price gap, and the stock is closely watched enough, that where we could start to see some of those positions be closed. But that is really the question at this point. I mean, will share prices be able to fill this price gap? Do we still see enough open orders left in the market that would cause that to happen? If that does occur, that would probably be the most bullish scenario that you could expect at this stage. That would give you a fair amount of upside price movement. You could be looking at share prices moving back into 2320 if that were to occur, and that would at least allow the stock to possibly establish a foothold above that critically important psychological level at $20 per share. So here's the current stock market update for GameStop Corporation, stock ticker GME. Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market. Lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership and start trading stocks with the pros.